Let's talk about the meeting at the FOMC, or the Federal Open Market Committee, yesterday. And then let's get into the reality of why I think Jerome Powell is full of crap. The FOMC uses several tools to influence the interest rates and the overall economy. Both of these tools are used to keep an FFR target, or a federal funding rate. The federal funds rate, or FFR, is the average interest rate banks pay for overnight borrowing in federal funds market. Now, the Federal Reserve uses certain tools to adjust this because they know how much it affects the overall economy in the markets. It affects things like credit cards, mortgages, bank loans. It also affects the US dollar and household assets. Effectively, if you ask people, this is the most important interest rate in the entire world. There's two tools that they use to keep the interest rate target in line. One is the IORB, or interest rate on reserve balances. The other is the overnight reverse repurchases, or RRP. The IORB, the first one that I mentioned, basically the Fed just pays interest rates on the reserves that banks hold. The overnight reverse repurchases, however, the Fed sells securities to banks that aren't eligible for interest on reserve balances, and then they buy them back at a higher rate the next day, or a higher price the next day, which essentially is paying the bank interest. Now, hopefully I haven't confused you too much yet, but let me get into the meat of what we're talking about here. Influencing this FFR, or federal funding rate, ultimately gives the Fed the ability to have sway and pull over the employment market. It has obviously interest rates across the nation and the world. It helps them to promote or to keep in check inflation. Now, here's where it gets fishy. This is a group that has been around for a long time, and they ultimately know that it takes time for the effects of changing an interest rate here to be seen here, at least 6 months or more. So they've always known that, and they've had to plan a long time. They've had to forecast way ahead to be able to keep things in line. So yesterday we had this meeting, and you've got Jerome Powell sitting here, who's supposed to be the expert, saying, this was not the inflation we were planning on. Dude, we have $27 trillion of debt, and we're continuing to print. You are not stupid. You know better. And if it's not the kind of inflation that you were looking for, what kind of inflation were you looking for? Now, just as a quick explanation, let me talk to you about why it matters so much that the interest rates stay low right now. It's kind of a big house of cards, so check it out. Home loans become cheaper, which increase the housing market. Or I should say improves the housing market. Homeowners then feel like they have more money and they spend more. It's also easier for them to take out home equity loans or home equity lines of credit, and then what do? They turn around and spend that as well. Obviously, these type of things do, stimulate the economy, albeit in kind of a false sense, but it does. Now that all this demand has increased, guess what? Employers have to hire more people to meet the demand, which then decreases unemployment. Makes sense, right? Which then increases people's ability to spend more because they're making more and more people are working, and so on. So ultimately, the Fed is just trying to keep a healthy level and balance throughout all of that. Well, I hate to be the bearer of bad news, but printing trillions with a T, which is 1 millions, is not effective to keep this cycle going in the direction that it should. The crazy thing about this whole thing is that it's kind of, I hate to call it this, but it's kind of like one big Ponzi scheme. The Fed used to require banks to keep a percentage of its deposits on hand every night. This prevented them from lending out every dollar they had. As of March 2020, they no longer had to do that. However, these banks hold capital in reserves for other banks to borrow from. Ultimately, I know someone's going to probably try to argue this with me, but it is one big digital robbing Peter to pay Paul. And on the front end, the money is just getting printed at this point anyway, because we all know we've been off the gold standard since 1971. Now, what they want you to think is that they drop the rates down to encourage banks to lend out money to people in need. When if you ask me, they're trying to set up one of us, right? The retail people, the lowly peasants, to be what I like to call bag holders. Because these rates can't stay down forever. And now they're going to start rolling them back. They're going to start tapering, which is going to do the exact opposite of everything I've been explaining. Now we have a whole bunch of people that have been spending more money than they probably should have a false sense of security, and they're going to start tapering and raising rates, and now they have all of this debt, and everything's changing. Not to mention it's going to affect the unemployment. It's going to affect literally everything. Here's the moral of the story. Elon Musk actually said it best. We should take the idea of more proposed spending and delete. No, really, delete. No more freaking spending. We're already $27 trillion in debt. And listen, that's just the number that they're showing. There is a whole lot more than that. And I will move back to what I originally said on my best performing TikTok ever, that I believe the only way to solve this country's problems as it relates to the debt that we've put ourselves in is to effectively destroy it. This is why I believe we are going to have to push ourselves into a state of deflation, which starts with stagflation, which is going to absolutely bring the economy to a grinding halt to be able to save our ability to be the reserve currency of the world. Now, what do I want to see? Bitcoin. But that's probably just not a reality. Who knows? I guess we'll see. Love you, crypto fam. Good luck.